developed a huge amount of power the last 100 years. It's been longer than 70 years, no question about that. And America continues to have a lot of power. But history shows that when countries get overextended, either economically, militarily, politically, whatever, they usually peak and go into decline. I'm not talking in my opinion. This is a simple historic fact. You know, 100 years ago, Britain was the richest, most powerful country in the world. There was no number two. 50 years later, it was bankrupt, literally bankrupt. The IMF had to bail out what had been the richest, most powerful country in the world. Go back in history. It has always been changing, and it always will. When countries get overextended, they usually wind up in decline. Well, what should we do? We should cut spending with an axe. No, with a chainsaw. You know, we have this gigantic debt, and it gets higher every day. We should cut spending. We should start reducing our debt. Are we going to do it? Of course not. Come on, if you ran on a policy in Washington, maybe you would get elected, but after a short time, people would say, wait a minute, this is very painful. We don't want to do this anymore. Nobody likes pain, even if they know it's good for you. So no, is America going to do it? No. I mean, I wish we would, but I know simple facts. America is certainly, I mean, if you said to most people in America, where do you want to go? They would say America. Where do you want to invest? They would say America. But that's because most people still don't know the facts, just as many people did not know the facts about the UK or about other countries that peaked and went into decline. Yes, no, America's great. We've got great PR, great movies, great TV, great lots of things. But that does not mean that beneath the surface there are not serious problems developing. I said I have teenage children. I don't like it. It's a good time to be an old American. It is not a good time to be a young American, in my point of view. We had the longest bull market in American history. You know, starting in 2009, things were great in the U.S. That's the longest in American history anyway. It doesn't mean it can't last 40 years, but it never has. Countries always when things are good for a while, people get overextended, they get overconfident, they think it's new investors come in, new investors call their friends and tell them, oh, I've discovered this new thing called the stock market, it's so much fun, and you can make money, and it's easy. It's easy to make money, you know, and that's always happens at the end of bull. It always has happened. It's happening again. Things get overextended, things get expensive, and we always have a bear market. This is not the first time this has happened. What I said before, they should only put their money where they themselves know a lot about where they're putting their money. Otherwise, when things go wrong, you don't know what to do. And things probably will go wrong again. You mentioned the 70s. You know, we had big inflation in those days, and as you point out, it's worse now. But in 1980, the interest rate on United States government treasury bills was over 21%. That's not a typo. They had to raise interest rates what would be extremely high now in order to kill inflation. Interest rates are nothing compared to 21% now. So if we're going to solve this problem, we're going to have to face a lot of pain. Do I like it? No. But I have to deal with facts. Less than 2 years ago that the Federal Reserve was saying there's not going to be inflation. And then they said, oh, it's temporary. Don't worry. This is transitory. You know, these guys don't know what they're doing. Most central bank officials or bureaucrats or academics, they don't know how the world works. They just want to preserve their job. You said they've raised interest rates. Sure they have, but I repeat, they were 21% on treasury bills, short-term treasury bills last time around. So no, we're going to have a lot of pain before we solve this problem. The biggest risk of the central banks, not just the Federal Reserve. The guy in Japan has said, you know, he will print his word unlimited amounts of money, and he does. Goes to work every day and prints as fast as he can. We have a lot of central banks doing things like that. Therein lies our problem. Whenever you have a lot of money printing, it distorts markets, it distorts inflation, it distorts interest rates and gigantic debt. You know, in 1980, America was a creditor nation. we were still a creditor. Now we're the largest debtor nation in the history of the world. Big things have changed since then, but not for the good, at least not as far as an American, which I am. No, I see what's happening. There was no there was still red China then. There was still Soviet Union then. A lot of huge things that have changed in the world. The problem is, it's very rare in history that everybody has known that a recession is coming. This is the most broadcast and most forecast recession that I've ever seen in my life. And knowing that most people are usually wrong, I would say we're probably not there, depending on where you're talking about. But for instance, China has been closed. Now China is opening up. That's going to give a big boost to the world economy, because they are the second largest economy in the world. So I would not be surprised if there is not a recession yet. I expect it certainly to come. The third year of a presidential cycle in American history has usually been a good year in the American stock market. And this is year 3 coming up. And the reason that happens is politicians try to spend a lot of money preparing for year 4, the next election, so they can get reelected. So I would imagine that things are really better than we read, just because the world doesn't work that way. If everybody knows something, it's usually wrong. The stock market's down, 19 or 20%? I've been around long enough to know that 19 or 20% is not very serious. Wait till it's down 70 or 80%. Wait till you see companies going bankrupt, left, right, and center. So far, this is not fun. Do not get me wrong. This is not fun. But it's certainly not dramatic or even significant in the history of financial markets. Well, unfortunately, many people, when they're down 50, 70%, say, oh my gosh, I lost a lot of money. Now I have to go back and make it back. And then they start taking more risk. And my answer to them is, no, you don't have to act quickly. The best thing you can do is to sit and do nothing for a while, recover, figure out what's going on. Because if you just rush in when you're emotionally wounded after losing a lot of money, you're usually going to make even more mistakes. So my best advice to people at that stage is do nothing, close the window, and just wait, recover, and then wait until you find something that you know is going to be good. Do not get emotional. I once had a great success in the markets, gigantic success. And I got very cocky. I began to think I was smart. I began to think I knew what I was doing. I had sold short, and I had actually bought puts and made a lot of money. So I covered my puts on the day the market made the bottom. And so I said, well, I'll wait for the market to rally, and then I'll sell short. And I did. And the market rallied. I sold short. But 3 or 4 months later, I was wiped out. And the reason I was wiped out is because I still did not know a lot about markets. I assumed that people knew what I knew, that most of the companies I shorted went bankrupt in the end. But I lost everything first because I did not know enough about markets. I did not know about trading. I did not know enough how markets reacted and how the public reacted. And so I lost everything. Now, I was very depressed. Don't think this was fun. I guess I could have become a priest or killed myself or who knows what. But I didn't. All I could do was start over, and I did. And somehow or another, I survived. And my best advice to everybody is what I said before. If you lose a lot of money, don't think you have to jump in and make it up again right away. Calm down, wait, recover until you find something that you know will work. If you like cars or motorcycles or something, and you see a change that you know is going to be successful, because every day you go on the internet and you look at cars or you read magazines about cars, etc. When you see something that you know is going to be successful, do some research and make an investment. But that's how you become successful. You wait until you find something that you understand and you know is going to be successful, and then you invest. And if something goes wrong, you will know what to do. If you are investing in what you understand and you know. And if something goes right, you will know what to do. But I know I'm the world's worst market timer. I've learned that in my investing career. No matter what I want to invest in, I know my timing is going to be bad. I have learned to wait after I decide there's something I want to invest in. But even then, my timing is usually bad. I am very bad at market timing. Some people are great. I've known people who they don't really know a whole lot about what they're investing in, but they are fantastic market timers. They are great short-term traders. And if they own something for a week, it's a long time, but they're so good at it. They're so good at short-term trading, and they can be successful. I'm terrible. I'm horrible at short-term trading. So if I've had success in my life, it's finding things that are depressed. It usually means they're ignored, because if something's ignored, it's usually not expensive. It's usually depressed. And finding change. If I can find something that is cheap, where there's enormous positive change taking place, and I can make an investment, I usually am successful in that investment. It often takes a while. I told you my timing is not very good usually, but I have learned to wait and then make an investment. And then, I am lazy, because then if you find investments like that, you can own them for 3 years, 5 years, 10 years, 15 years. For me, that's a great way to invest. But as I said, I know people who owning something for 3 days is long term. There are different kinds of investors in the world. The cheapest asset class I know are commodities. I mean, bonds are certainly the highest they've been in history. Property in many places is in a bubble. Go to New Zealand or Korea or places, you see bubbles in property in lots of places. In many parts of America, some stocks have been, Apple and Amazon and Tencent and Samsung, those stocks are going up all the time. So bubbles were developing in those stocks. The only thing I know that's still cheap is the commodities. I mean, silver's down 70% from its all-time high. Sugar's down 70%. I mean, people haven't been rushing out and buying a lot of commodities in recent years. I am not buying them at the moment myself, but you're asking about cheap asset classes. And some countries, I mean, Uzbekistan is very cheap right now. I've made a few investments in Uzbekistan recently, but it's hard to find stock markets or bond markets that haven't been overexploited in the last few years. That's what a long bull market does. People get around to everything eventually.